All right, fun stuff. Didn't quite hit the top of the market makers' expected move, as they overpriced bulls on calls throughout the majority of the day. But we did come up and kind of almost tap the two standard deviation move in VWAP over the last year. So big fucking push up here. Let's not discount how hard of a push this is. It's kind of nuts. But failing a little bit into the end of the day. Holding above 6,700. I do still think that Vana and Charm flows into the end of this week could probably keep us propped up, barring any negative data. However, some of this may have just been a rescue mission for window dressing positions that were bought yesterday, and with those now in the money, we might start to see profit taking on those positions and some more erosion of support, which we saw quite a bit of yesterday as well, bringing that gamma neutral level possibly closer to spot again. So keep an eye on that tonight when we start to get the overnight updates coming in on GS. We saw a 5 standard deviation move on ES in the intraday session today, peaking at around 1442 and kind of sold off from there. We got a 3 standard deviation move to the downside into close. So some pretty actually like wild price action, at least relative to what we've seen recently. Um, Out here, the dollar kind of flat on the day, which is surprising. Yields in the belly of the curve fell pretty sharply, but at the front and the back end, not too much overall change. I would say top end yields are down a little bit. We're definitely officially not getting NFP data on Friday now, so it's a pretty good sequence of events, I think. For pushing yields at the top end higher and pushing dollar up. So possibly now with the confirmation that data is going to be delayed inevitably, we will start to see a little bit more fear mixed in. The NFP data is very important for the bull case and Fed cuts. And while ADP data was lower, JOLTS was higher. And so NFP and unemployment may really not be where bulls think it is. However, that data won't exist, so it won't matter probably. But the uncertainty surrounding data releases as we continue to not get them will increase fear and probably drive up more and more out of the money put positioning and tail risk hedging, which can start to drive spot vol higher. Um, as spot vol goes higher, obviously MMs aren't going to want to be held into a concave return position, which they are here above Vega neutral. And they will probably start shedding delta. As they shed delta, volatility will pick up in the near term, which will push up volatility in the long term. And that starts to open up the risk of positioning slipping into where the market makers hedging turns a little bit more pro-cyclical and they start selling into the downside. Right now, moves are still getting chased. So, you got the upside move, it got chased because the MM has to hedge their losses as we push higher. But the downside moves will also get chased. And so we're probably going to get a lot of like ping pong back and forth between the low and the high of the day until we get some sort of break in implied volatility in the short term. Correlation hitting brand new low for the year, right? Yep. Well, not for the year, but since April. This is the most we have seen any push into dispersion. Um, Also true for the 3 month correlation. So we did see a big push on the dispersion trade today. Correlation's very very low, but it tends not to stay around these levels for very long, and we usually get kind of a snapback as the underlying volatility has become just so juicy that people want to sell them. And I think right now, like the average underlying implied vol of NQ components is about like 3 to 4x the index volatility. So there's definitely a lot of incentive to sell just all the volatility on those. And that incentive has only just been increased further today. So that could be kind of interesting, especially if that turnaround happens quickly. Remember, CTAs are, significantly overweight long, and they'll want to be hedging, or kind of hedging that off. And so we could see kind of like a risk off period. I don't know how long it'll be, but some risk would probably get shed, and if that turns into something a little more, we could see another like minor correction at the very least. And somewhere where we're starting to see some evidence of that being true is the forward yield on volatility, which is continuously climbing. We're ending the day here at negative 7.82%. And every day that's moving just a little bit higher towards positive. And we really haven't seen positive forward yield for any significant period of time since, back in May and April. But we have gotten a few breakouts in that positive return on volatility around the beginning of August and the beginning of September, and here we are beginning of October, and we may see some of the same. In line with those breakouts in the forward yield on volatility, we are seeing a fairly slow deleveraging in the long end of the carry. But as the long end of the carry falls, the demand for that long vol goes up, and we are seeing the short end of the carry fall as well, and the 10-2 year picking up a bit. Skew turning around a little, but not much. Yesterday probably helped account for some of our early in the day price action. I will say breadth still doesn't look very good. Most of the things that are pumping are already well above their 250-day moving averages. We're not seeing a lot of return in 46% of the index above its 20-day moving average, though. So concentration's also picking up in line with the increase in dispersion, which is expected. Fed fund futures rolled, but we've got about 57 points of cuts priced into June, 38.5 priced into March, and 14.5 priced into January. So still pricing at about one rate cut by the end of the year. ADP data changed that a little bit this morning. And then we got about 4% steepening in the 10-2 year, up to about 56%. Possibly some slight increase in fears of a recession due to the government shutdown, but the government will need to be shut down for a significantly longer period of time for that to really take hold. And then lastly, this is fun. Correlation between VX and cash VIX now at negative 51.62%, which is extremely negative historically. The last time we saw anything like this was like 2015. And volatility instruments were quite a lot different back then, before Volmageddon. But generally speaking, these periods of time do not last long, maybe like 30-45 days at most, before short vol has to yield and demand for volatility picks back up. So at least in the history of the market, there's very few periods like this where they've lasted for an extended period of time. They're usually very short, and then positive correlation returns. It's also a very clear indication that short vol positioning in the market is significantly overweight and very much at risk. We did actually finally test the fucking trend that we failed today near the top, or well, it came about as close to it as we've ever been. And we did not close at that trend or above it, but we are kind of starting to form a more local trend, which failed, and this is a bounce off of that. So if this fails again, probably want to look for the prior all-time high at 66.99. as at least a signal, and then probably down at like 66.43 to confirm a failure. And then we've got the 20-day moving average test, or the EMA 30 test under 6600, which would be of some significance as well. I will say that failures of the 20-day moving average over the last several months have been pretty rare, so maybe that's a better one to pay attention to at least first, and then additional confirmation at the EMA 30. But let's see if we lose 6700 before that. ES continuing to sell off after close, so back towards 6700. If we open below that tomorrow, below 6700, might be a little bit bearish, but I would still want to lose that like 6675 level with the positioning into Friday before I would want to play the downside at all. Because remember, we could just get support here again and then push up to another new all-time high. And Vana and Charm definitely support that into the end of the week. So I think that's it, though. Do we have any data? Are we getting any actual data tomorrow? I know we get Challenger tomorrow. That's of some importance. We have a 10-year JGB auction tonight, which could affect the carry trade quite a bit. Obviously, the BOJ has been picking up kind of their rhetoric regarding a rate hike, especially with the pressures from inflation due to tariffs. Remember, they're an heavily import reliant economy, and so the tariffs are probably really hitting them quite hard. Yeah, tomorrow, Challenger, we get mortgage rates. Yeah, not too much tomorrow. Tomorrow's a pretty blank slate, so I guess we'll see what, consumer confidence and the 10-year auction and the BOJ speech tonight do. And then obviously EU employment tomorrow could have some effect on the dollar. Challenger will have more of an effect than it usually does. Remember, job cuts are expected to jump to about 150K, so they're projecting quite a big pop in job cuts. And if that comes in as a miss, it could kind of pull back on the bullishness we got off the ADP data today. And then tomorrow night, we're not going to get jobless claims. I don't think we're going to get factory orders or vehicle sales either tomorrow. But tomorrow night we will get Japanese PMIs, and we'll get Yuta speaking tomorrow night, and then a short end auction out of Japan. Friday we will still get some data, like we're going to get S&P PMIs, we're going to get ISM services, which is now very important because no government data. So both employment and pricing data coming out of those PMI reports, which will significantly increase their impact as a macro event. Generally, they provide like a little intraday volatility, but without any NFP data or unemployment data, they're going to be significantly more important for figuring out projections, at least in the near term, until we figure out whether the government's going to reopen or not. So yeah, end of week still pretty interesting. Definitely some opportunities for vol to pick up on Friday. Not so much tomorrow, but maybe tomorrow kind of flattens out some of this price action. We'll see where positioning is after today, though. If positioning continues to the road to the underneath spot, to the downside, that might be kind of indicative that we're getting closer to some kind of sell-off, maybe into the second week of October here. And I think that's it. So I'll have Pickles picks out tonight, and I will see you guys tomorrow. Later.